In a world marked by economic turbulence and uncertainty, the Federal Reserve's impending meeting looms large, a pivotal moment where decisions could shape the trajectory of economies and livelihoods. Amidst the backdrop of surging inflation and robust job markets, the stage is set for a delicate balancing act, where the Fed's moves could either soothe or exacerbate the economic landscape. Once poised for rate cuts, recent economic indicators have rewritten the script, leaving analysts pondering the Fed's next steps. As we delve into the intricacies of economic policy and its real-world implications, one question looms large. How will the Fed navigate the complex interplay between inflation, employment, and economic growth in the months to come? Welcome to Global Economic Drops, where we bring you simple summaries of important daily and weekly economic news from around the world. Our mission is to simplify the economy and help you navigate the treacherous waters facing investors today. So before we get into today's videos, hit that subscribe button and turn on post notifications by clicking the bell icon. And if you find our news briefs valuable, don't forget to hit the like button. Leave a comment down below telling us just what you think is going on with the state of the world, and share this video with a friend or two so that you can all stay updated together. Thanks for watching, and now let's dive into it. As the Federal Reserve convenes its much-anticipated meeting in Washington, the economic landscape is anything but static. What was once anticipated as a series of interest rate cuts to counterbalance soaring inflation rates reminiscent of the 1980s now seems like a distant memory. Instead, the conversation has shifted dramatically, with inflation proving more stubborn than expected and economic activity remaining remarkably resilient. The Fed's Monetary Policy Committee, responsible for steering the nation's economic course, finds itself grappling with a conundrum. Despite whispers of potential rate cuts just a few months ago, recent economic data has upended those expectations. From hotter-than-expected inflation readings to a relentless surge in consumer spending and a robust labor market, the narrative has evolved beyond anticipation. Sam Bullard, managing director at Wells Fargo's Corporate and Investment Banking Group, captures the sentiment succinctly: stubborn inflation and resilient economic activity have left the FOMC little reason to ease policy in the near term. The week leading up to the Fed's meeting has been characterized by a flurry of economic indicators, each offering its own insight into the state of the economy. Stocks surged towards the week's end, buoyed by strong performances from tech giants like Microsoft and Alphabet, despite Thursday's sobering report of slowed GDP growth in the first quarter. Yet, beneath the surface, challenges persist. Government spending growth has reached its lowest point since 2022, while net exports have subtracted from GDP growth. The looming specter of inflation continues to cast a shadow over economic projections, with BCA research anticipating a slowdown in consumer spending and potential labor market deterioration, hinting at a looming recession. While the prospect of immediate rate cuts may be off the table, the Fed's meeting holds significant weight. Beyond the interest rate decisions, the meeting may offer crucial insights into the central bank's stance on inflation and the broader economic outlook for the remainder of the year. Additionally, attention will be focused on updates regarding the Fed's balance sheet and its efforts to reduce securities holdings amassed during the COVID-19 pandemic. The economic data deluge continues throughout the week, with key reports providing further clarity on various aspects of the economy. From the S&P CoreLogic Home Price Index to consumer confidence readings and labor market reports, each data point serves as a piece of the larger economic puzzle. Wednesday brings the eagerly anticipated DP employment survey for April, offering a glimpse into the state of the labor market. Despite expectations of a slight dip from March, the forecast suggests continued growth, indicative of an expanding job market. Concurrently, the Labor Department releases its job openings report for March, providing further insight into labor market dynamics. The week culminates with the release of the April jobs report on Friday, a closely watched indicator of economic health. While economists anticipate a slowdown from March's surprising increase, projections still point towards robust job growth, underscoring the resilience of the labor market amidst broader economic uncertainties. As the economic narrative unfolds, one cannot help but wonder, how will these developments shape the economic trajectory in the months to come? How can policymakers navigate the delicate balance between inflation, employment, and economic growth to ensure stability and prosperity for all? Share your thoughts in the comments section below, and remember to subscribe to the channel to stay up to date on global economic news. See you on the next video, and please like and share if you enjoy our content.